Hello, good afternoon, everyone, and welcome to the latest TI and Apply European Road Freight Benchmark webinar for Q3 2020. We'll just wait a few moments for everyone to finish joining the session, and then we'll get started properly. So bear with us for just a few more moments. Okay, it looks like numbers have stabilized. So welcome again, everyone, to TI and Apply's latest European Road Freight Rate Benchmark for Q3 2020. Today, we'll be talking through the rate trends that we've seen for road freight in Europe over Q3 and thinking about the outlook ahead for Q4, particularly as much of Europe heads into new lockdowns. The structure for today's session will be a 20 to 25-minute presentation where we'll take you through the European level trends for road freight rates, and then drill down into a variety of individual international lanes and show you some of the data we've seen over the recent quarters for that, and talk about some of the trends we see there as well. After that presentation, there'll be a Q&A session, so please do feel free to submit any questions via the webinar's Q&A feature at any time during the session, and then we'll address these for you at the end. They can obviously be about the trends, or if you want to know more about the data as well, the team here are happy to help with that. After the webinar, we'll make a recording of the session available to all of you and to anyone who hasn't been able to actually attend the live session. And you'll also all be sent a copy of the white paper that goes with the benchmark report if you'd want to review the data and the analysis in a bit more detail. Okay. My name is Michael Clover. I'm TI's Head of Commercial Development, and I'm your host for today. I'm also joined by Andy Rawls, who is a quantitative analyst at Transport Intelligence and is instrumental in much of the analysis that we'll be reviewing today. Hello, Andy.
Hi, Michael.
Alongside Andy, we also have William Beggery, who is Apply's road freight transport and rate expert, or one of Apply's experts. He'll be offering his expertise and views on many of the lanes today. Hello, William.
Hello, Michael. Hello, everyone.
And finally, I'm joined by Thomas Leroux, who is the Chief Data and Research Officer at Apply and is responsible for managing all of the data streams at Apply, which enable us to provide this view of freight rate development and trends. Hello, Thomas.
Hello, everybody.
Thomas, would you like to give us just a little bit of background about Apply and some of the data we're going to be looking at today?
Yes, thank you, Michael. As a background, just an introduction of Apply. Apply is a SaaS platform offering two services. The first one is a marketplace where shippers can buy freight capacities directly from carriers or freight forwarders. And the second one is the one that we will use today. It's a market analysis service in which our users can explore freight rates for three transportation modes: air freight and sea freight on a worldwide scope, and the road transport in Europe and in North America. So today the focus will be on the full truckload on the European market, and the figures that you will see are based on our analysis that we take from a database of more than 250 million shipments collected from transactional rates. Michael, you take the next one.
Yes, it's also worth saying that this is the fourth quarter of collaboration and anniversary of TI and Apply's collaboration, with Apply providing the data for the road freight rates and TI as a research company providing some overarching analysis as well on these road freight rates. So it's very nice to celebrate a year of collaboration here as well. So I think it's probably time we get into some of the freight rates, and we'll start off by looking at the overall European picture for road freight rate development. As you can see, it's been a bit up and down in recent quarters, but we had a bit of an uptick again in Q3. And Andy, perhaps you could tell us a bit more about the European picture.
Yeah, so rates are up 1.2% into this quarter. This improvement is in line with the economic rebound we've seen after the lockdowns in Q1 and Q2. The recovery was seen in most trade lanes. 26 out of the 36 lanes covered saw a rate increase. But we're still seeing rates below year-over-year standards. So that 1102 compares to the 1105 for Q3 19. It's the fourth consecutive quarter of rates below their prior year figures. So I mean that's also a little bit reflective of the demand picture there as well. So into this quarter, we've seen capacity largely redeployed across the continent. Job retention schemes being unwound, more drivers going back to work and being redeployed across Europe. But yeah, still uncertainty has remained through here, and carriers when they have their thin margins, they'll be seeking to keep prices high to perhaps account for maybe not being able to take a backhaul load. So in these uncertain environments, carriers will seek to keep prices as high as they can, really. In terms of costs, it's still quite low. I mean, diesel costs are 5% below Q2 levels. And actually what we saw in Q1 and Q2 was border controls and border restrictions kind of being imposed. This did have an effect on road freight as well. But those queues have largely subsided, so some of those cost issues have gone. So really, I think the main picture here is the demand improvement, and that seems to be driving the increase in rates in Q3.
Yeah, it's been interesting to track the recovery, and rebound from the initial lockdowns over the last couple of quarters, and we'll be talking more about that later on in the webinar. But also now thinking ahead as we unfortunately move into new lockdowns across most of Europe, thinking about what's going to be happening in Q4 with the peak season unfolding as well. So, I mean, that paints us a picture of the overall development of rates in Europe, but we can also, of course, use Upply's data to drill down into specific lanes and see some of the prices through Q3 here on different lanes around Europe, and we'll examine some of these in more detail a bit later on. But this hopes to show a picture across the whole of Europe, really. And this is a part of Upply's coverage, but recently, Thomas, you were telling me that Upply has added some more coverage of Eastern Europe as well to your data package. Is that right?
Yes, exactly. What you can see on the map over there, it's the prices for FTL, so full truckloads for general cargo. In Upply, we have also data regarding other type of merchandise, and we just added some new data that are very interesting, and that does allow us to have a benchmark and some analysis also for a partial truck. So starting below 1 tons of merchandise and up to the full truckload. Of course, the coverage is not perfect all across Europe, but we have very good data on the Western countries, and we are even going up to the Turkey or Russia, and we have some interesting data on these countries.
Yeah, absolutely. It's great to have that kind of broad scope of coverage to really see exactly what's going on all around Europe, really. So the map really helps us to see, some of those individual lanes and the rates we see there. But we can also look, obviously, at the general trends and pricing dynamics across the whole of Europe. And we like to include this chart here on freight rates by basically euros by kilometre, just to show the general trend within Europe. And you can essentially use this trend line to give you an estimate of what a rate would cost over any distance, particularly on continental Europe or in continental Europe. There are, of course, some outliers from that, which we can see today. So it's always interesting to discuss why some lanes may not fit this trend as well. And Andy, perhaps you can shed some more light on that for us.
Yeah, of course. First, just to explain as well, I mean, you can see that kind of curve is that kind of curved inverse relationship between the rates per kilometre and the journey length as well. So the longer journeys, really, there's cost efficiencies being created, which I guess diminishes as the length gets longer. There's essentially a break-even point, a theoretical kind of break-even point as you get longer, which means that the kind of the fall in rate per kilometre is smaller as the journey distance gets longer. But yeah, as you said, we wanted to look at some of the outliers this quarter. We've looked at some of the more expensive and least expensive ones before, but these outliers here. We have Paris to Birmingham and Duisburg to Birmingham, which I will kind of explain quickly. These ones, there are quite large trade lane disparities in terms of the volumes going in. So the volumes going into the UK from both France and Germany are larger than the other way around. And that really creates a circumstance where carriers on the shippers on the front haul have to pay a premium for the fact that the carriers might not be able to carry a backhaul. So that's what creates those disparity, and you'll see those ones kind of increasing and to the right of that graph there. In addition, the UK ones, some of the UK lanes have, the ferry costs are involved there as well. So that also kind of makes those lanes more expensive, but they're also affected by the disparity there. And the other one there is Duisburg to Milan. So for that one, I should have said that for Paris Birmingham, actually, interestingly, the euro per kilometre, it's actually over €1 per kilometre more expensive than the trend line would actually suggest. So that's 275 versus it would have suggested 171. For Duisburg Milan, it's a bit smaller, but it's 171 is the actual price for Q3, and that compares against the trend line price of 135 per kilometre. And for this one, I mean, one of the routes crosses through Germany into Switzerland into Italy, which can be subject to some border delays. And Switzerland also has the highest toll price per kilometre of any European country, so that also affects that particular lane. So yeah, I think what we want to do is just highlight some of, there is a bit of uniformity in terms of the general dynamics which affect rates across Europe, but on a lane by lane basis, they can be really skewed. There can be a real difference in the pricing dynamics there.
Yeah. Well, thanks for that, Andy. It helps to explain the overall dynamics, but also, of course, every lane is different. Every lane has its own characteristics, which is why it's so important to drill down into some of those individual lanes. And that's what I'd like to do now, really. So I think to start with, we'll look at some of Europe's highest volume lanes, which we can see 3 of the highest volume lanes here. William, perhaps you could offer some views on these for us.
Yes, Michael. Q3 saw a convergence in rates on the front haul and back haul Madrid-Paris lanes. But we see that the prices from Spain are structurally higher, as is seen from the graph. And so how to explain such a situation? The COVID-19 crisis, which has hit the world, has caused consumption to drop dramatically in France. And this is true for the automotive, this is true also for our construction product. It's a little less true for the fresh product. For the later, it's the supply that has fallen. But this led to a drop in transport demand from Spain to France, and which caused a fall in transport prices and mechanically push up the price from France to Spain. And I think for the next months, the transport prices will remain very close in both directions. Note that according to Spain National Social Security Institute, 7% of Spanish transport companies have disappeared in 1 year. So we will closely observe the kind of concentration and its potential effects on inflation. And concerning Duisburg to Lille, the rates on the front haul from Duisburg to Lille move in an opposing direction to the back haul this quarter. Front haul rates grew 4.3% quarter over quarter, while the back haul rates fell 1.3%. The economic slowdown has led Germany to reduce its sourcing from other countries, and especially from France, and for intermediate products. I attended the virtual conferences organized by GlassTech. So this is the world's largest professional event dedicated to glass professionals. And I learned that the consumption of black glass, flat glass, had fallen this year by 10% in Germany, but imports, which normally represent 50% of the total, had fallen by 80%. And so this is a prime example of the strong reduction of intermediary products importation in Germany. And on the contrary, German products, thanks to their stronger added value, are necessary for the French economy. And this creates, it aggravates the imbalance. And so because of the second wave, I don't believe this trend will reverse.
Very interesting. Yes, it's always important to consider those dynamics, and even the individual commodities which tend to flow in those lanes have such a big impact on rate development. So yeah, we can have a bit of an outlook there for that. Andy, perhaps you'd like to come in on Duisburg, Warsaw.
Sure. Yeah. So I suppose Germany and Poland, the economies there have I wouldn't want to say not being affected by COVID. Obviously, everywhere has, but perhaps to a lesser extent than some of their neighbours, really. So the economies are recovering quicker, and from a probably a higher base as well. So you can see the trend is up and to the right for both lanes. There's a little bit of a drop on the Warsaw Duisburg, but generally for both lanes, it's as upwards, certainly year over year. I mean, the Duisburg Warsaw is nearly 10% up year over year. So yeah, as I said, Germany's had a really good recovery. Some of the data there shows that the mileage of trucks driven along German toll roads is actually at pre-COVID levels already. So that's been quite a strong recovery there. But also what's affected this lanes is that in Q1 and Q2, when sort of Polish hauliers were they tended to some of them returned home with less loads across the rest of the continent, more able to do bilateral routes for Germany to Poland. But in this quarter, they've been redeployed across Europe, and that's actually had a constraining impact on capacity. So what you have is the higher demand and the capacity kind of tightening as well, and that's keeping rates pushing up and to the right.
Yeah, it's so interesting to see the effects of these kind of dynamics on the overall picture, really. And we're talking about imports and exports from various economies doing better or worse. When we look at sort of the whole European economy, we can also consider import-exports from Europe, and we like to look at key ports to help us assess that. And here we're looking at a chart here which averages some of the rates from major ports like Antwerp and Rotterdam here. Andy, perhaps you could take us through the developments on this chart too.
Yeah, I thought this was interesting because it seems sort of remarkably steady given the circumstances this year. The Q4 2019 right into Q3 2020 have all been relatively steady, with a little bit of an increase in the final quarter there as well. I mean, these two ports a little bit less seem to have outperformed a little bit on some of their rival ports across Europe, but so demand has been a bit better there overall, but it's still surprising to see, I think, just how steady these ones really have been.
Perhaps we'll see something different when we drill down into the individual ports there and have a look at the trends. So, William, can you take us through Antwerp's rates for us?
Yeah, Michael. In general, transport prices index recorded at the entry of or exit of Antwerp fairly well reflects port activity. There is a price stability on year-on-year basis. This corresponds to the evolution of container exchange between Europe and the world, which seems not to have been affected by the COVID-19 crisis. It's common to say that Antwerp is the first French port, but French non-European imports are stable, especially from China. And the other direction, China has demanded a lot of cereals and a lot of pork meat that French agriculture has supplied.
Yeah, it's very interesting. So that gets kept rates up, I suppose. And Andy, on Rotterdam.
Yeah, so I think it's a little bit of a push up into Rotterdam. Rates up by 0.2%, and actually Q3 throughput at TEU throughput at Rotterdam was up by sort of a similar level, actually 0.1% year over year. And yeah, I think one of the reasons for the slight increase into Q3 is the increase in German exports on the Duisburg to Rotterdam lane. Rates are up 2.6% quarter over quarter, and that really appears to reflect key global markets, notably China, recovering well, having reasonably good demand levels stay there, and that's helped German trade to rebound, and we're seeing that in rates increasing as well in Q3.
Yeah. So economic comeback really coming through there, I suppose. And actually, if we want to look at that in a bit more detail, I mentioned earlier that we were going to examine the relationship between the economic rebound after the lockdown and freight rate development. And we've taken 4 examples of different countries and their relationship there. Andy, perhaps you can explain in more detail the trends we've seen.
Yeah, so the rates here are the average of all the rates that we have collected in this white paper for inbound and outbound for Germany, UK, France, Italy. We'll also look to Spain as well, and we've also have 2 measures of economic activity in the composite leading indicators index from the OECD and the purchasing managers index from IHS Market. And these measures, I guess the absolute values are a little bit less relevant, but these are designed to, or they have a very close correlation with upticks and downturns in economic activity. So the trend line is the most important thing to be kind of looking at here. We want to investigate how that increase in demand or that change in demand has affected rates on a country by country basis. And for Germany, you can see there's a pretty clear uptick in both rates and the economy as well, and the economic activity. The correlation there is actually about 0.8 for the R coefficient is 0.82 for CLI and for 0.83 for PMI, so quite strong there. There previously wasn't. We looked historically back at some of the data that relationship didn't exist so much. So that really strong rebound, it does appear to be having a big effect on freight rates. But when we look at the other countries, see the UK there, the CLI and the PMI are kind of leveling off and even falling a little bit into September. The correlation is not quite as strong there, and there previously wasn't one either. In France, on the bottom right graph, you can see that kind of flattening, particularly in the in both the CLI and the PMI, and again the correlation is not great. It's about 0.5. So, and then the rates are up and down a little bit less of a sharp increase there. And then similarly for Italy, in fact, Italy, we've shown there's no statistical correlation there with demand. And you can see as well, there's a kind of a flatlining or a slowing in the economic recovery there. So yeah, we really wanted to test this out and see where what the relationship was. And it really appears that in Germany, where that rebound has been really quite strong, from a slightly higher level to start off with as well. So obviously rebound, the fall into March and April wasn't quite as difficult as for some other countries. But that really sharp rebound there has really affected Germany. For some of the other countries, that relationship isn't clear. I mean, the rates are generally up, but that demand, the demand to rates relationship isn't quite so clear. There are other things kind of playing their part here, not least, I think capacity changes as well. So yes, for me, the real takeaway there is the German rebound there and the rates increasing alongside it.
I think we're looking at this now, especially as we go into the winter and into new lockdowns, trying to learn any lessons we can from the initial experience from the first lockdowns. And of course, it's challenging because it's very different this time around. We're not quite so shocked by it. People have much better plans in place and experience of dealing with it. But obviously, we need as much evidence as we can to judge the way the market's going to be moving over the next few months. Obviously, we looked a lot in previous papers at volatility, and you almost expect big change when there's a crisis on the cards. We always like to look at the lanes which have experienced the highest degree of change over the last quarter as well, and we can see that in this chart for Germany to Austria or Duisburg, Vienna as well here, to take a closer look at the freight rate development we see there. And I don't know whether, William, you could help us to explain or make sense of the recent uptick we've seen in rates on this lane.
Yeah, I will try. Duisburg, Vienna saw the largest quarterly price rise in Q3, and rates grew 4.9% quarter over quarter. Interestingly, rates on this lane also showed one of the sharpest year-over-year declines. Minus 7.4%. So this line is very strongly impacted by German automotive demand. The drop in transport demand following the automotive crisis caused overcapacity in the transport supply, and therefore particularly marked drop in prices, and especially in the second half of 2019. Austria, being in the center of Europe, Austria is crossed by many low-cost carriers, and so since the start of the COVID, these foreign fleets have remained in their countries, and this may have had an upward effect on the price mix that we are seeing in Q2 and Q3.
Yeah, thank you, William. Helps us to see a bit more clearly what that kind of development we've seen there. Another lane which we've taken interest in this quarter, and think we're likely to see some other developments on in Q4 is the Warsaw to Paris lane, and perhaps Andy, you can explain a bit further.
Yeah, so the Warsaw Paris lane we've kind of picked up because this tends to see a Q4 uptick. You can see from that for all the years available here, and in fact, if you compare the Q4 rates with the average rate across the time periods, there's a 3.7% premium for Q4. Looking at that kind of that Paris kind of consumer demand segment, so peak season, there tends to be a bit of an uptick in rates. But yeah, we picked this out just as we were starting to see more restrictions implied in Paris. Since then, obviously, we've seen France go into more of a lockdown. But it does just, I suppose, show that the amount of changes that COVID has brought is that we can't necessarily guarantee that Q4 uptick this time out. Usually, yeah, we used to say we usually expect to see it, but that demand levels really expected to drop compared to where they normally would be. So this is just an example, really, of how COVID is potentially changing the dynamics that we would normally see on lanes in normal times.
William, do you have anything you'd like to add to that?
Personally, I think that the look of this curve, so the Warsaw Paris, is very surprising, in fact. But it's exactly the reverse of the Warsaw Duisburg that we saw previously. And there are only 500 kilometers between the two rival cities, so I mean Paris and Duisburg. So the only reasons I hear from the market are that the French retail sector is very powerful in Poland. And they have a strong leverage effect in its negotiation, in transport price negotiations. And the second reason I hear also that there is a strong competition between Polish and Lithuanian carriers precisely on this train. So very interesting and surprising.
Yeah. Again, it just highlights the importance of going down into the individual lanes and getting a specific benchmark with all of those particular trends. And you may be wondering, obviously looking at all of this data, a bit more about how Apply compile the data that actually underpins these kind of rates and these benchmarks. Thomas, perhaps you could explain just in a bit more detail how the data is put together and what it really represents.
Yes, I will be very quick to let some time for the questions. But basically, we collect data on a daily basis, data from carriers, from freight forwarders, from shippers also in Europe. We have data also from our marketplace. All data that we talk about are transactional prices. This is quite important because there is a real shipment that they came from A to B and we get the price. This is this price that we compute. So we get it every day, and every week we update our prices on our website so that you can have directly for one origin destination the market trend on a weekly basis, and you have it up to 2 years in the past. So feel free to come and have a look directly. And if you have additional questions regarding the methodology and the data, feel free to ask.
Thank you, Thomas. In that case, we can move on to a Q&A session. So please do feel free to ask any questions you have further to the methodology or the scope of data, obviously on any of the trends that we've had. We've had a few questions coming already, which a couple of easy ones on whether or not you'll get the slides afterwards, which we will. We'll send out the recording of the presentation and the white paper to all of you. And then some other questions as well. A couple of questions. One, for instance, how have we seen, or what's been the capacity trend across Europe for Q3 2020? Would anyone like to come in on that?
Yeah, sure. So I mean, in Q1, Q2, we saw furlough schemes, job retention schemes being introduced to keep drivers at work, to keep drivers on the payroll. Those have been unwound. We got to a stage where I think in July in France, for example, about only 5% of trucks were kind of not in use there. So that has been unwound, and that has kind of reflected the increase in demand to a certain extent. I mean, not overall, because that demand increase really appears to have pushed rates higher overall, but certainly capacity has recovered much quicker, has recovered quite quickly as well to come up. On the other hand, as well, there are levels of unemployment. There's some evidence of unemployment increasing, but overall the trend has been for capacity to increase to broadly match the pickup in demand.
Okay, and another question we've had is, I suppose, looking ahead to Q4 and Q1, particularly next year, is do you have the feeling that due to Brexit, volumes towards the UK will go up in the next weeks?
Yeah, I mean, I would suspect so. We still don't know what the future relationship is going to be, and it looks like there's a lot of the UK hauliers certainly concerned about the lack of information from the government. So there is certainly a concern that they might not be ready in time for volumes sort of into Q1 of 2021. So we might well see a kind of a rush in volumes into the final quarter. That could also lead to a rate increase as well.
Yes, we did certainly see there was a bit of stockpiling going on prior to the previous Brexit date,
yeah.
so we're probably likely to see that kind of trend again as we go through the next quarter or so. Okay, another question we've had, a couple of others actually, two really focusing on scope of coverage. So there's might be a question here for Tamar really, but one question asking about does Apply have this data for Turkey or Asia Pacific as well? Tamar, I don't know if you'd like to come in on that.
Yes, regarding the APAC region, I just answered directly via text, but we have data for sea freight and air freight on multimodal. So we have the sea part and the air part, but also with the truck at the origin if or destination if needed. But we don't have data regarding full truckload markets in APAC, to be clear. And regarding Turkey, we have some data. This is not the biggest corridor and the biggest country we have data on. So it might be complex to answer right away, but feel free to give me more information regarding the city of origin or the city of destination to have a look at it. We have data on Turkey, but it depends on which corridor.
Okay. Thank you, Tamar. And I suppose one other question we've got is what impact will the new wave of lockdowns have on freight rates? William, I don't know if you'd like to come in on that one.
Well, in fact, I have to say just I'm quite pessimistic about the future of transport market. The second wave is hitting us now. All the European government seems to take lighter on the lockdown measure, but there is therefore a consequent drop in consumption, which has a repercussion on transport demand, and at the same time there is a continuity of the transport offer. So mechanically, supply will be greater than demand, and so price will therefore fall, I think.
Thank you, William. And Andy, do you have anything you'd like to add to that?
Yeah, no, that makes sense. Yes, I think on one of the key differences this time around is manufacturing seems to be continuing on, so that kind of does provide a bit of a base level. But yeah, certainly into Q4 when we might expect retail volumes to soar. Really, that won't be so much the case. I certainly know that specifically the UK will be locked down from beginning tomorrow for a month. So and obviously that's repeated across lots of countries across Europe as well. So yeah, that retail demand drop will be significant, and yeah, could well lead to a price fall.
All right. Well, thank you both, and thank you, Tamar, as well, for joining the session today, and thanks to everyone for attending. Obviously, we'd love to continue the conversation with you. So if you do have further questions about the road freight rates available through Apply or the wider road freight market analysis available through Transport Intelligence, then please do get in touch with us using the contact details on your screen now. We'll be in touch with the copy of the paper and the recording of the session as well, if you want to watch again or take a closer look at any of the charts and graphs. So thanks very much to all our panelists, and thank you for attending, and hopefully we'll see you all next time.